A very good morning to all of you, ladies and gentlemen. Thank you very much for joining us for this session on a winter cold morning. And our winter mornings are difficult. Generally, first sessions are difficult to start with. But we hope people will trickle in maybe 5-10 minutes, but in benefit of keeping the timeline up, we would like to start right now. May I request everyone to get settled down, be seated, please. And maybe the people sitting in the banquet chairs, may I request everyone to come forward a bit? Thank you for this movement. So we'll start the session with this session called Advanced Technological Innovations and the Underserved. So to lead and moderate this session, may I invite on stage Mr. Abhishek Anand, Senior Partner, Microsafe Consulting. Abhishek. Thank you. And also my panelists for the session, Ms. Sucharita Mukherjee, co-founder and Chief Executive Officer, Kaleidofin Private Limited. Mr. Ramesh Arunachalam, co-founder, Chief Technology Officer and Intelligence Architect, Serpico Advanced Neural Technologies and Research Association, Switzerland. Ramesh, the longest name for an organization you have created. And Mr. Anand Kumar Bajaj, Chief Executive Officer, Nearby Technologies. Before we start, may I request everyone to just check the QR code so that you can ask questions on the QR on online itself and also give feedback. Uh, and now over to Anand. I hope the session will be very interesting. Thank you.
Thank you so much. Good morning, everyone. It seems a bit early in Delhi, 9:30 a.m. in winters in Delhi. But I hope everyone who is present here has had coffee and tea. So let's warm up to this discussion. It's a very interesting discussion on technology and what kind of innovation are happening in technology. And we have a pretty interesting panel here representing technology from different spheres. We have Sucharita, a lot of work around personalized digital journeys and credit scoring. We have Anandji, who pretty much gives vision to the payment sector and the Kiko sector. And of course, we have Rameshji, who has been a stalwart for more than 2 decades, has been involved in inclusion of technology in financial services in multiple ways. So I'll start off with Rameshji on on so my sort of initial question, just to warm up this discussion and the group, is you have seen how technology has been used in financial services. Um, Back in days when MFIs were pretty small, maybe they were contemplating use of technology. Initially, loan management system was the first sort of technology solution that financial institutions were aspiring. And then, of course, as we move ahead, loan management system became core banking solution, and then other technologies also got included. So my question is how you have sort of observed usage of technology over a period of time, and how was it back then to now, if you compare what has been the enabler and what are the challenges that you foresee in using technology?
That's an interesting question. Thank you for putting me on spot and as the first speaker, but that's okay. Um, um, I think if you go back, if you really go back, I've been associated with this industry from the 80s, late mid 80s. That's a fairly long time. Ever since I passed out, came back from the US, and if you see, you did not have any serious. You had Unix systems then, right? Okay. I'm a technology guy. I have programmed, and you had Unix systems then. Citibank had the best core banking system then. And then, and if you looked at the the NGO, basically you had NGO MFIs. Most of the names that you see who are NBFC MFIs today were NGO MFIs. The first NBFC was Basics and Vijay Mahajan. And even Vijay was having rudimentary, very rudimentary systems. Initially they did on Excel, then they used Visual Basic and Oracle systems over time. I was involved in helping them do some things. So that was how it was, how infant it was. But there was one interesting point. Everybody recognized even that technology can play an important role in reducing the costs in the last mile. That recognition came in right then, right? So how you do it, and then you had, and there is Puneet in the audience, and we've had a lot of discussions with Puneet, and I used to work with Microsave then, right? And we had a lot of discussions with ICICI, the social banking group, right? Am I correct? And where we said we will look at technology. And when we met Nachiket in 2003, he was executive director, becoming DMD. He said, let's get the best systems and let's control all risks with systems, right? Technology can be an enabler also. So I think from then it's evolved and it's evolved more. And then I think the changing phase came somewhere in 2009-10 when mobile technology came in. Mobile became huge. I mean, I also happened to work with the FDC, Financial Deepening Challenge Fund. M-Pesa came out of our project. So I worked on M-Pesa in Africa.
Equity Bank.
Safaricom and Faulu MFI were the first ones who did it in Africa. So, but I think after 2010, you started seeing more mobile money come in. And I think demonetization in some ways was a pusher. You realize that you take away money from circulation a lot. See, not all cash is black and not all black is cash. So I think people made, it's a very important point you need to understand. By removing cash out of the system, you're not eliminating that. So that is when the need for digitization came up. And it was, if you saw the first few months after demonetization, there was a huge need. And even then, if you had applications available, there was a serious problem. Low-income people had two issues, digital and process literacy. They could not type on the mobile phone, and they didn't understand the process. So you needed more convenient. So from there on, you moved on, and we now make conversational causal AI, deterministic AI products in multiple languages. And I think voice is becoming very important. From there to now, so to just not monopolize the time, I said, we have seen technology reducing costs and also bringing in a lot of transparency in the sector, something which Nachiket had talked of in 2003. And I think it's helped in reducing costs, it's helped to make transactions more transparent, and it's become so important that boards now, technology, and today cyber security is very, very important, right? And that, so you need to have risk in your boards in terms of understanding technology. Your biggest risk today is technology, because the space for digitization has enhanced so much that you open up your surface area for attack, right? So that becomes very important. That's critical. So that's just to, I don't know if I answered your question well.
Sure,
yeah.
sure. Certainly. So talking about AI, I mean, I'll just ask Sucharita. Initially, a lot of automation happened at the back end, how financial institutions can manage their data, but it's mostly to do with what's there in the loan application form, and then you appraise and underwrite and then disburse. But a lot more is being done now with data, and your institution is pretty much focused on personalized digital journeys. So do you think that is enabling some of the gaps that were prevalent in financial inclusion? And or is it that the human capacity gap in the financial institution, because it's a human intensive sort of effort still in MFIs. Do you think the gap still remains a lot to be filled?
No, thanks so much, Abhishek. I do think that data can play a pivotal role in transforming just the quality of financial inclusion. So when we think about financial inclusion, it's not just about having access to a loan or having access to a bank account, but it's indeed about usage, the type of loan. Do you have the kind of loan as a customer? Do you have the kind of loan that you really need? If you are, let's say, a tailor, having fairly regular cash flows, but still some cyclicality, right, towards festivals, towards sort of, let's say, school seasons, you may need a slightly different type of working capital loan versus if you're a farmer with significant risks, right? Climate, temperature affecting your harvest, as well as extreme cyclicality, right? There are no cash flows at all. For a considerable period of time, you need a slightly different type of loan. So at Kaleidofin, we've always believed that the next frontier for inclusion is really providing tailored credit products to customers. And you're right that the fact that this is so human intensive makes it very hard to replicate, right? So how do you actually train thousands and thousands of field officers on how to, let's say, evaluate a farmer, or how to evaluate a kirana store, or how to evaluate a tailor? There are many, many different types of occupations. This is very difficult to do. It's truly challenging, and that's where technology can play a role. So therefore, one of our products, SkyScore, which has now underwritten, actually, we've just got up to 10 million customers cumulatively underwritten. SkyScore is now underwriting about 250 crores a day of loans. The largest use case is tailored women entrepreneur loans, because that is the big opportunity with microfinance as a channel, right? That we have, tens of millions of customers who are eligible and could potentially get access to tailored credit. And also, the other point is, would like the convenience of individually underwritten credit, would not necessarily always like to depend on other group members for access to credit, brings more better products, more dignity in the journey. So those softer aspects are also to be considered when we are thinking about, evolution of the sector, and data indeed can play a big role. And, the way data can play a big role is, of course, through the use of transaction data, which a lot of companies have but do not fully utilize. So they have their own transaction data, there is credit bureau data, but there is also a wealth of data around socioeconomic variables, around natural disaster probabilities, around soil type, temperature. So for example, recently one of our insights actually, we were able to tailor a maize loan with respect to temperature and probability of the loan getting repaid and the tenor of the loan. So longer tenor loans, for example, in high temperature regions just don't work for maize, because it's a highly, it's a crop that reacts, quite a bit to temperature conditions. So there is that opportunity to bring in, credit scoring. Credit scoring can actually be integrated into the loan origination system. So it's absolutely seamless from the point of view of the customer. It can go into self-service journeys with customers requesting loans. And credit scoring has a huge role to play in risk management and ultimately in improving wallet share with the customer. So it's not just to reduce risk, it's also to do more with the same customer. So those opportunities, I think, are very exciting for the ecosystem. And we, of course, really look forward to working with all types of originators.
It's very interesting. Just a follow on this. So, are you also using some sort of a climate data? As you were saying, there's seasonality, but there are climate-related challenges as well. Farmers do suffer a lot because of those issues. So are you using that as a input in your credit scoring tool, or providing some predictability to where the loan might go?
No, we do in fact use a ton of climate data as well as agri data. So core agri data such as harvest timelines, such as soil type, temperature conditions, and this data is actually available now, at a polygon level. So can be, filtered into a specialist, let's say, chi-score agri. So wherever we see that there are large numbers of agri loans, or even, from time to time, we do see some originators experimenting and launching a specialist farmer loan product there, of course. But even within the microfinance channel, about 60% plus is agri within the sector. So, and the risk differentiation that it adds, so climate and agri data alone is about, 15 to 17%, which is very, so the additional risk differentiation over and above the transaction data sources. So the combination of the two is particularly interesting when it comes to the development of specialist agri scores, and this can lead to a lot of product development by the industry.
Interesting. And how far can we see how predictable are climate models that we are using? Like, is it like it can predict 6 months, 2 years, or even beyond?
A great question. Just because climate data itself is so dynamic, right? And we're living through a period of massive change where, you honestly cannot look at data from 10 years ago at all, right? Because the data has changed so massively. What we actually run internally is a model monitoring process, including sort of looking at the key features such as climate risk, which tells us that, okay, this variable is not stable. And it gives us signals as to when to update our models. So we have a monthly model monitoring process anyway, but this also gives us the signals to say, look at the refresh data. It informs sort of the frequency of that refresh as well. So we do this in a very systematic way, because anyone who tells you that models, are a magic bullet is lying to you. Models decay. All models decay. Even transaction data changes. So it's incredibly important to keep the model relevant and continue to invest in that model. It's not a one-time, I wish it was, but it's not a one-time investment. It's a continuous process.
Yeah, so it's not a static model. It has to be a dynamic, and that's why AI ML would be useful. Right. Okay, so now just moving to Anand. So India has a pretty widespread cash in, cash out network, and Pay Nearby has been one of the major player, and sort of has made a name of in terms of creating that trust in the field. So initial question would be, what all did you do in terms of building client protection and augmenting trust in the communities, because payment is a financial service product which requires a bit of trust element in it.
So we are in a business of sachetizing trust and dispensing it through local trusted partners. That's the calling on trust, because there is a digital savvy India, 10%, and there is tech oblivious Bharat, 90%. You will relate all the big techs are after, and rightfully, after the 10% digital savvy segment, because they are easily reachable through digital medium. You advertise on ABCD platforms till X, and you get access to those consumers. Not just for the reason of the Bharat, but the fact that there is a position which is hyperactive and competitive and disloyal This is a digital savvy segment which is value seeking and no loyalty attached to a provider. But in contrast, when you are able to take the services through a local trusted touch point to the citizens, people remain attached. The question of trust is very important because the segment which is tech oblivious counts on someone nearby. And we thought we should name ourselves nearby. So nearby technologies, taking everything nearby, starting with pay nearby, insure nearby, loan nearby, and everything. Of course, travel is far away, not nearby, but pun intended. The idea is to harness the AI with the human intelligence, the social intelligence that the retailer has, where my family has been going for last 10, 15 decades to purchase things, and we trust each other. They give me credit, I count on them and fetch milk for my family. So that trust mode harnessing is the whole program about. If I say that banking has done a fabulous job of reaching meaty segments, it will not be out of place to say that they're all in the business of making money. And thanks to government for pushing the agenda of inclusion. And like any other sector, like in telecom, there is a rural service obligation. In insurance, there is a rural service obligation. Likewise, in financial services, the government, well in time, in your times itself, probably woke up and said, rural inclusion is very important. Because, and Nachiket used to say to all of us at the bank, we are all beneficiary of his wisdom, that any growth which is non-inclusive is self-destructive. So someone who is just scaling up on their own without taking care of the ecosystem, hence it was important that owning 5 patents is no relevance if you are not able to bring the high end of technology to the bottom of the pyramid. But this is the only way that you can take technology to the pyramid, bottom of the pyramid, through assisted mode.
Rameshji, you want to come in?
Yeah, I have a mic.
So on
I'm not that old. Huh? I'm only 63, and I've been around. I've been around from when I was a kid in this sector.
Yeah,
So,
it's
and I don't
1980s.
look 63 either. I'm fit.
Yeah.
Yeah. So, but I mean, when he said from your times,
No,
"Aapke
I-
zamana," that sounded.
No, I must say that the tech which took 40 years to develop took 10 years to compound and another 3 years or maybe 3 months to scale now. So the technology evolution is also...
I said I must join issue with you and have some fun on stage because I think on substantive points we can differ, but on this age and feeling, I will not allow. That is not pardonable, right? Okay, let's move on.
Point noted.
on customer protection and of course augmenting trust. I mean, the question is your institution and in fact Sucharita's institution is also involved on the tech side and use of data. How are you ensuring that there are adequate client protection measures inbuilt in your technology solution, and so that low-income segment is also not on the wrong side of use of data?
It's a very interesting point, and I'm going to tell you, start with a story. Have you heard Bertrand Russell's story of the inductivist turkey? 1950, Bertrand Russell had a beautiful story. It's the story of the inductivist turkey. The turkey made an observation on a Monday, on a Tuesday, on a Wednesday, on a sunny day, on a snowy day, and said, 11 a.m., the farmer comes, he's got the same gait, he's got the same smile, I'll be fed. Okay? Fair point. And it was expecting to be fed. Came Thanksgiving, and they have turkeys. The throat of the turkey was slit. So the problem with so here now we are a core tech company. Our technology gets applied in different fields. We are an artificial general intelligence company. So there are two models in technology in AI. One is deterministic, and the other is your inductivist models, which are your stochastic and probabilistic models. Stochastic models have randomness, probabilistic models have uncertainty, okay? Whereas your deterministic models are not based on data, they're based on rules. All of you may want to understand, there's one excellent operating system which uses deterministic models, that's called Mycin. It came out of a dissertation at Stanford, 1973. I worked on it in the 80s, it was written in Lisp. There are very few programmers who write Lisp today. But it's a great program. It was for bacterial infection for doctors. It's deployed. Now, going back to data protection. So when in deterministic model, see where does customer protection come? You want to ensure data is not biased, right? Okay. So when you look at pattern recognition models, when you look at existing AI models which use data, not to say they're wrong, but data can be biased. Data need not be representative. How do you overcome that? So if you go to, I'm telling you, all of you can do this exercise. Every large language model that's available, and I work with all of them, Google and Microsoft and others, you go and input a question today in the chat, you'll get one response. For a given set of conditions, you'll get a response today. You go and do it in the same chat tomorrow, you'll get a different response. That's where customer protection gets to be very important. Your model has to be deterministic for the same output. These are mission critical systems. So we are working with the CAG, we are working with the DRDO, and I think financial inclusion for low income people is mission critical. I'm sure all of you will agree. It's mission critical because one loan, one situation can make all the difference. So I think the key is to ensure, even if you're using data-driven models, ensure that your data is representative, it doesn't carry bias. And what happens is when you digitize and when you have AI, if you have biases and lack of representation, it tends to be amplified when you bring it into AI, right? So I think that's one. Two, I think anonymized data, when you use it, there are ways to do it, right? And three, collect only absolutely necessary data. Even on phones, you see the apps asking for a lot of things, which is not required, right? So I think this is the way you can protect the customer. And fourth, most important, any decision, loan, advice, anything, you must be able to explain. We are now moving towards, there's a big thought process, at least on technical terms, we are having a debate every day on how to move towards completely explainable AI. Traditional large language models are black box. You go to GPT, you ask a question. You go to Claude, you ask a question. You go to Grok, you ask a question. You don't know why it gives you the answer. It gives you one answer for the same input. You input the same prompt tomorrow morning in a different chat, you'll get a different answer. So what do you take? You take this or you take that? So the question is, you need to be very, very careful in that it starts with your architecture. So the point that I'm getting is protection starts with your architecture. So if you understand your architecture, if you build your architecture well, if you keep the customer in mind, then you can safeguard them. Okay, thank you.
Sucharita,
Yeah.
your take on this?
Yes, no, I think it's an incredibly important question, and agree in general on the principles of data protection that you've outlined, Ramesh. On customer protection, just to talk a little bit more about that, there are sort of two schools of thought, right? One is centered around disclosure, good explanation of financial products, terms and conditions, and let the customer then decide whatever is best for them, which is more like sort of, the buyer has full transparency at the very least. And then the higher bar is that actually financial service providers, especially regulated financial service providers, actually have a duty to ensure that the customers are getting financial products that are suitable. Even if they're not the most suitable, at least they should not do any harm, right? So you have sort of those two levels within the customer protection, do no harm. And yes, you've actually given an appropriate, well-structured loan product or insurance product. So I think that with respect to finance, I think the whole buyer beware or disclosure-led system, I feel, has very little merit. Although that is very much where we are today, with respect to financial inclusion type of products, that is where we are. But I think we do need to move into a system where we focus much more on customer protection and, in fact, on suitability as an objective. Chi-Score itself actually incorporates suitability by, for example, saying that what is the appropriate loan product, what is the appropriate indebtedness. And I totally agree with Ramesh that, there are models that tell you what you want to hear. In this case, actually, sometimes the model has to say what customers or loan providers don't want to hear, that this product is not suitable, the amount of indebtedness perhaps is too much or too little, right? And we see both ends of the spectrum, where customers are forced to take, let's say, 4 different loan products, pay processing fees 4 times over, encounter friction, with 5 different payment dates in a month. And that itself takes away so much cost. In fact, if that customer were to be given, instead of 450,000 loans, one well underwritten 2 lakh loan, the customer would be much better off, right? We, of course, also have customers on the other end who are just have way too much leverage. So I think Chi-score itself incorporates suitability into its credit recommendation decision. That's number 1. 2, we also have invested in model explainability, because we're very keen that whether it's the regulator or the customer asking a question about why did my loan get accepted or rejected, that answer is clear and can be explained by the institution to the customer. So we've invested quite a bit in making our models explainable, and we've actually invested in a full dashboard which actually assists the MFI to explain to the customer why. And this is a very important part of customer protection as well, because you have the right to know. You should have, taking it a step further, ideally you should have the right to know how you can improve your financial health, right? Which is the next level. And, we're very keen to really invest in a customer-facing Chi-score. We are not there yet at all, just to be clear. But I think it's definitely an aspiration for the future, because then you put that data into the hands of the customer and actually guide them through that suitability journey.
Customer facing means self-initiated.
Yeah. So the customer themselves can say that I can run my finances either on path A or on path B, and that's a decision, right, for the customer to take. The customer can actually proactively improve their financial health through the use of this data. Just saying that that's a path for the future, but we would very much like to get there.
Thanks. So another question, Anand. We've observed when there was Corona lockdowns, some MFIs which were using digital payment services was slightly better off compared to institutions that were mostly dependent on human intensive efforts for collection. And that also marked this thing that there was a wider acknowledgement and appreciation that traditional financial institutions need to link to more, digital ecosystem for payments especially. How do you see this piece evolving going forward in next few years?
See, like Nandan says, that technology is a non-reversible compounding change creator, and each new technology only compounds the further stage. What is important is that technology has very high disregard for the barrier of the rich and poor. What it can do with poor is bring Viksit Bharat in 2030 rather than 2047. If we look at the Corona time that you are specifically pointing to, we were privileged that pre-Corona we had built a network in deep rural areas, and all the lenders who were not able to send their people to collect money, we integrated with 90 of those large partners. You name a NBFC of repute, we did deep API integrations. That is something you can establish remotely without traveling during Corona. And we collect about 2,000 crore every month today in EMI from their customers, even today. What started during Corona has built up as a business model. But is this a good business? Really? Is where we are breaking our own business modules to go a level up. Because this 2,000 crore that comes to me every month is actually a 10,000 crore that comes to my industry. And it's not a very easy to manage cash on the ground. We look up, double click at one level above, there is about 1 lakh crore of EMI which is paid, automated through NACH debits in the bank accounts. So we thought, why even this 10,000 is trickling into us? It should all be automated. And if you do research, you realize that once you lend, after all this science, ultimately customer withdraws cash and goes. और उस खाते में पैसा है ही नहीं NACH debit के लिए. उसका ecosystem is all cash oriented. So how do you digitize that user so that there is money always in the account and then the debits suffer through the account? It is a win-win proposition, actually, what we have built with partner banks now, and we are now marketing to NBFCs and microfinance companies that if there is money in the account, the consumer earns interest, the bank makes NIM margin on that float, and we say, मेहंदी वारन वाले को जो लगे मेहंदी को रंग, कि अगर float है account में तो हमको पैसा दे देना, अगर नहीं है तो मत देना. So it's a win-win model for everyone, and the ecosystem gets digitized, which means more data for them to cycle, process. But I always wondered, why would one only say that insurance is a subject matter of solicitation? मुझे तो लोन भी सॉलिसिटेशन का लगता है और म्यूचुअल फंड भी सॉलिसिटेशन और डिजिटल पेमेंट आना भी सॉलिसिटेशन की ज़रूरत लगती है. एक डिजिटल savvy India is different, which is self-aware and goes to specialists for each app, each service there is an app. Like you go to Zerodha for mutual fund or Grow, or you go for insurance to some other app, etc. But Mass Bharat, if you think they will be able to do everything in a self-service mode, it means we need to do a lot of work on user centricity, simplification of design, educating them, and telling them water means H2O. Rather, you first get them a glass of water, let them survive, and then come the track of gradually building up confidence, trust, and then traverse the journey. And 80% market is huge market for living up to self-service expectations. But I agree with Suchait. We are actually building in a module in our Sathi app, Payoneer by Sathi, which is a consumer app now. It's a native alternative of India for UPI to build robust ecosystem around UPI in Mass Bharat. And we have made modules available with account aggregator partners, which can fetch data to show the consumer about the account balances and the patterns and behaviors. But my worry remains that वो graph देख के कितना समझेगा gold का दाम, mutual fund का दाम, खुद के accounts में balances, and can I take a loan or not, unless it is solicited through a partner, which is what we are building this moat of retail touch points as service centers trying to educate ecosystem, and they're not running away. So a local trusted, crowdsourced sales team on the ground is available, 1 million at that. And thankfully, the 2 crore Lakhpati Didi that has been announced, there is another app that we have built with RBI Innovation Hub support, Digital Nari, which we are trying to put it in the hands of the 2 crore Lakhpati Didis. That actually will compound to Mass Bharat. Every mohalla, there would be someone or the other using that app and able to socialize the ecosystem with the technology. That's where I think the compounding of technology at grassroots will happen in our lives.
No, it's very interesting because I was about to ask you about the SHG ecosystem as well, because of course 5 or 6 crore women are there in my private sector led microfinance program, but there is like 10 crore women in the SHG ecosystem, pretty vibrant and stable ecosystem there as well. And we hear Payoneer Buy is also involved pretty much in both sides of the financial.
Yeah. So absolutely, that's a great point, actually. So if you see the concept of, and I'm reading it, it's not a political agenda to do 2 crore Lakhpati Didi. It's actually a driving vehicle. Even 1 crore of them working with 25 families of 4 members each is 100 crore. So look at that machinery when working in tandem with technology, granularized and brought to them in their local languages, what compounding effect it can yield. Self-help group is a great effort done over the 40 years, I would say, not over the 40 years. So Ramesh, don't get me wrong, but it's an amazing seed sown. अब उसमें खाद और पानी चाहिए, यही माटी उभरेगी, यही जर्रा चमकेगा. The seeds are already sown. NABARD has done tremendous work, great amount of work with State Bank of India, all PSU banks by opening accounts, building self-help group ecosystem across the country. Now we have to leverage that.
Yeah. So if I remember that data, around $20 billion worth of loan goes to the SHG bank linkage program. These are 10 crore women, and in some of our dipstick researches, we find that almost 2 in every 10 women in SHG are serious entrepreneurs and would want to be treated as such. So their requirements from financial ecosystem is a bit different. There is, of course, a question of personalized journeys as well, and many women, of course, ask for higher ticket size loans, more customized loans. Um, so, anything that you think, is there a role of data in that ecosystem? Because there's a lot that is happening on the SHG side as well. There is a huge amount of effort on digitizing data in SHG ecosystem, with low QoS becoming more important solution. Now we'll need payment systems to dock onto it, and then maybe your rule-based engine and credit scoring tools as well to slice and dice what is there underneath that 10 crore women, what segments are emerging, and how can we as service provider engage better with those women. So your thoughts on what can be done?
Yeah, I think it's quite exciting that we are looking at the SHG universe as a base, and RBI in fact even provided a strong nudge, right, to banks to say, look at your SHG data and provide women entrepreneur loans to those who are eligible. It's still early days, right? It's been I think about 12 months since that strong nudge. But you're absolutely right that in order for that to happen, first of all, product definitions need to change, right? Individual women entrepreneur loan cannot require things like GST, returns, or I don't know, like project finance proposals, because this is what banks usually ask for, right? And obviously the product will not work if you define it like that. So I think there's quite a bit of work that's required on the product. And there is work that's required on developing credit scores on the back of this data. Just given what we see, of just the amount of overlap from the bureaus between SHG and GLG, we actually think that already there's a lot of work done, right, which can be leveraged. And actually on the credit scoring side, we might be very close. With a few months of effort, it should be possible to launch a credit score off the back of this data, and then that graduation will become possible. And like you said, this is as big, if not bigger, right, than the GLG universe. So I think there's a huge role to play. I think a lot of, counterparties will need to work together. Also, for instance, working on anonymized data, which we always do, by the way. We never request personal data at all because we don't actually use it. So for two reasons. One, of course, there's enormous data protection liability that kicks in. And two, it could also introduce bias in the whole modeling process. We would not like to include those personal aspects into the data. So I think this is very exciting. And at least we would certainly love to work on this in the future.
I have a take actually. We did a research with Ashoka University a couple of years ago, funded by Reserve Bank Innovation Hub. And we believe that everything around rural is about sachetizing. Unfortunately, what came out in the research was very interesting, that there is no data, there is no document that they have. They have gold. So just take and lend them. Very easy to do that. Second, it emerged as a Let me ask if one would volunteer, hazard a guess. Who is the user of the hearing aid product? Anyone in the audience? Whom is this product for? The hearing aid? Sorry? Deaf? No, actually it's for the entire family. He is good with what he is. Perspective badaliye apna. So that 2,000 rupee product is actually 200 rupee product for 10-member family. This came out of the research, and what it cut over to is insurance is not a product for men. It's a product for women, because anything happened to men, women suffer. And a plain reading of insurance says that there is something called insurable interest. Women can buy insurance for the husband. So you are out there in the market, labor has gone to urban center to work, and you are trying to sell insurance in the rural, and woman says, मर तो गया है टाउन कमाने के लिए. तो यार प्रोडक्ट उसके लिए है, पर्सपेक्टिव बदलिए. डेटा ओरिएंटेशन अपनी जगह है, बट एक यथार्थ कुछ थोड़ा अलग है. वी आर लिटिल caught on to that. Third, Ramesh, I'll just give you this.
Sure.
Third is, we all are educated and we see FD, RD is a RD number in your account. But to the masses, if you are able to show a pictorial depiction of their goal, a cycle, for example, they want to save 10,000, and start coloring it with every deposit that they trickle in the account. साइकिल का पहिया पीछे वाला रंग गया, हैंडल रंग गई, सीट रंग गया अगले महीने तक. They become more motivated to complete that goal. Kids education, start running coloring the book. तो हम आपके सपनों में रंग भर रहे हैं अगर. That orientation brings more motivation to people to start saving towards a particular goal that is visually there, rather than saying आदित्य का MBA X amount and वो मेरे लिए RD है, वो recurring deposit की तरह number चल रहा है. You and I relate to it, but masses, if you are able to change the perspective ना, कहानी कुछ और बनेगी वहाँ पे. And the FD OD product is available to us. We are aware that I don't need to break my FD, I can take a OD. How easy is it to tell the user in the rural, don't break your cycle's wheel, take a OD for 5 days, 10 days, urgency hai to. 25 bips, 50 bips, it's available to you and I. Same thing replicated. So how do you granularize, sachetize, digitize is one part, but how do you render? The UI UX is where I said in the beginning is very, very important beyond technology now.
Yeah, and I think we're out of time, so I just want to say two things. One, I think understanding so I'm going to tell you something that we have done at Serpico. Serpico is a baby, it's only 24 months old. My co-founder is a world-famous flautist. He played the theme song for The Lord of the Rings and Titanic. So that we met somewhere and we decided we'll start. And we'll really go for unleashing the power of technology for people. So my first point is, we are still at the infancy compared to what this technology can do. It can do wonders, number one. Number two, we have transitioned, we launched 5 products this year. I'll give you an example of underwriting. If you take value chains, we are doing underwriting by value chains, right? If you look at aquaculture, many bankers in India, we did research on aquaculture, they kept asking us, how do you underwrite, how do you see underwater? So we've used causal AI, we've used satellite, we've used multimodal data to estimate biomass dynamically at any time. And in places like Africa, where you don't have this level of digitization, where you don't have transactions, biomass becomes an excellent surrogate for this. So I think, and we also have a product called the Strategic Advisor, which we are launching for 70 value chains somewhere in May. Anybody is open to see it. You can get my contacts from Access and you can see a demo. But the interesting part there is that we have brought in voice in local language. When you bring in voice, it's a game changer, absolute game changer, because people can't type. And I think unleashing that power of technology, not being satisfied with what we have, disrupting this, and my friend heads AI at Google, and I tell him, we're coming for you, right? Sure. So we need to use this. I think if you and I I'm saying this very seriously and very passionately, you and I have access to the best technology. Why not low-income people? They deserve it, right? Thank you.
Yeah. A quick point, Sucharita, from you, and then we'll maybe ask 1 or 2 questions in the interest of time, because we're sort of run out of time.
Yeah. No, super quickly, I think Ramesh also spoke about, for example, working on M-Pesa in the early days. I do think that there is, for example, the role of agent networks for this customer segment, I think all of us agree, is very, very important. And I do think as a sector, we should be humble and look at also excellent examples that have worked in other markets. We, at least personally, for me, the last year has been a huge learning journey working in other parts of South Asia, Africa, and there's certainly merit to looking at, how digitization is working there, how payment systems are working there, how agent networks are compensated there, how much more universal digitization can be achieved. I think there's a lot we can do, and request to you, Abhishek, to make some of this cross-fertilization happen,
Yeah,
because it would
yeah.
really benefit us as a sector.
No, completely agree. And I mean, we have very similar thoughts on this, that there's a lot that we can also pick up and learn from Africa, Pacific, and Southeast Asia, and how they engage in financial inclusion, and vice versa, because India has also leapfrog because of multiple regulatory enablement, and then there's now DPI, DPGs to smoothen some of the rails. So maybe in the interest of time, I'll just maybe open it up. There's a lot of thought leaders present here as well in the participants. So any question, maybe we can take one question or two question max.
Okay, Anand, you mentioned about 10% and 90% population which is digitally savvy and not savvy. Could you elaborate on the definition? Because the access to internet now is widespread, even in rural areas. So how are you targeting this 10 and 97?
So see, product by product, if you see, insurance is maybe 3%, mutual fund is about 4%, loan is about 8%, payment is about 20%. So it depends product to product. Internet is about maybe 60, 70%. Yeah.
I think Anand is also talking about process and digital literacy. Digital literacy is very different from access to internet, right? Not everybody has it, right? Is that correct, Anand? Yeah. I think he's talking about digital and process literacy. If you looked at demonetization, we demonetized, we gave them options of digitizing and moving forward. People struggled. Why? You can't type numbers. It's so difficult. For people who don't understand numbers, it's so difficult. If you can do it seamlessly in voice, you can speak. Voice is a great enabler. But then voice brings in risks also. You need to cover for those risks. So I think Anand's larger point was digital literacy and process literacy. Correct me, boss.
Yeah. Thank you. Any other question? Otherwise, we'll close it. It's one.
No more questions.
Hello. Yeah, hi, good morning. We have also discussed about SHG payments, digitization. So how can we include them into digital payments? So now UPI multi-signatory being launched very recently. So wanted to hear your thoughts on how do you think it can be leveraged, and how far we are from making SHG payments digitized.
One quick submission. There is a concept of dual auth, which is enabled by Aadhaar. We are privileged to be one of the lead partners in dual authentication for SHG. But the story just starts there. The real game is after them, the 10, 12 members, they also have to come on the same bandwagon to start using digital. And yes, many banks have to still come on from the manual check signature to the dual bio auth. So road ban gayi hai. दोनों साइड का ब्रिज कनेक्ट करना बाकी है अभी बस.
Any challenges you see, foresee?
Many. We will talk through the day after this, but
Thank you so much. It was. Thanks. So it was a engaging discussion. Thank you so much for your inputs, and we believe what we've gathered is that it's an interesting time in financial inclusion with lots of technology enhancement happening as we speak. on data, on being able to service customers who are not physically present with us, which means a lot of product innovation can happen. There's a challenge in front of us on how we can further invest in digital technology and using digital technologies. So with this, we'll just close this session. Thank you so much. Good to see the room got filled eventually with people. Thank you so much.
Thank you. Thank you very much.
We were thinking whether to start or not, but once we started, within 7 minutes, I noticed the hall filling up, and the session got very interesting afterwards. Thank you very much, Abhishek, for this, and the panelists for an engaging session. Thanks, audience, for this engagement. Thank you. We move to the next session.
Thank you, Subhendu.
Hello. So may I request the audience to remain seated, please, while the earlier panel moves. So now we'll be moving to our next session on the client protection and overt indebtedness, safeguarding borrowers for sustainable finance. So this session will largely focus on bringing together the investors, lenders, and practitioners to discuss how client protection measures can be effectively embedded in business models. So while we have this photo up, I would like to invite the fellow moderators and the panelists. So this session will be moderated by Noemi Renier, Head of Debt and Partner, EcoFin Investment Management. And joining the session as panelists would be Prema Jaiswal, Senior Vice President, Risk Management, Black Soil; Aditya Mohan, Senior Investment Officer, FMO; Danit Liv Castillo, Risk, ESG and Impact Manager at EcoFin Investment Management; and Sudhir Narayan, CEO, MCRIL Limited.